Now, introduction to order blocks. So, order blocks, I'm pretty sure you guys have heard it all around. And if you guys haven't, I'm going to simplify it and I'm going to put it down and break it down to its smallest component. So, order blocks. So, similar to supply and demand, and some people would argue it's the same thing, order blocks are levels where we can anticipate a market reaction. Order blocks, they are very specific versus a consolidation zone. So order blocks are very specific candles of price that create the impulse moves. So just like any concept, we're going to talk about it, and it's important to understand that the concepts are just that. And I know I keep reiterating it but I really wanted to really go into people's minds that the concepts are just that. We as traders, we have to utilize them within the proper market context. So we're going to start off with bullish order blocks. Bullish order blocks consist of the last down candle or candles before a major price swing up. We use that candle or candle's range as a potential area of buying. Typically, the opening price of the candle will be an area of sensitivity. We can go further into it by taking the full range of the order block and finding the 50% level of that range. So here are going to be some illustrations. So right here we have our bullish order block. Right here, it's going to be this down close candle before the major upswing. So this was the last candle before we had our price impulse. And once you start to see price expansion and start to see price really moving forward, now we can delineate this area in here. So the candle's opening price is typically what we use, and it's just a downswing here before the up price swing. So as you guys can see, this is the candle's opening price. So price, once it came to retest it, price eventually came back into that level. And we know that there's a very good chance it's going to have an area of sensitivity. And as you see, price did end up actually having a very strong reaction off of this level. Now, when I was talking to you guys about using the 50% of the range, this is what I mean. So typically what we can do is we go from, let's say, the candles open to the candle close. So this full range here, just the body, not the wicks. Some people use the wicks, right? And again, you guys can go ahead and experiment with that, but I personally like to use the bodies. So this right here is the full range from the open down to the close of this candle. Now, this dotted line in here, that is the midpoint of the order block. Now you see how this is much more precise versus the opening. And again, some people, they don't really care because they just care about kind of getting into the trade versus, you know, being very meticulous in their approach, right? But again, if you're someone who really wants precision, this is a very, very good tool to use because it gives you a much better, it gives you just a much better entry if you wait for the midpoint. And again, you can reduce your stop loss, and there's just so much that you can do with it when you refine it, but there are some cons with it as well. But that's neither here nor there. Now we're going to talk about the other side, which is bearish order blocks. Bearish order blocks consist of the last up candle or candles before a major price swing down. Now, we use that candle or candle's range as a potential area of selling. Typically, the opening price of that candle will be an area of sensitivity. And we can go further into it by taking the full range of the order block and finding the 50% level of that range, identically to what we were just talking about. And here are some illustrations. Now, bearish order block, we have this downswing here, this candle right here, the bullish one. We take the opening price and we delineate it. So that way we have a good understanding of this bearish order block. And you guys can see price came in, retested it, and we had a decent sell-off after hitting this range. Now again, I'm going to show you guys the 50% of that range, and we get a much more accurate level, and we have price kind of coming in. We do wick above it a little bit, but price ultimately comes back down and respects our bearish order block. Now, I'm going to leave it at here for this section. In the next section, we're actually going to be talking about how to find high probability order blocks. I'm going to also talk to you guys, well, before that, we're going to actually talk about stop blocks, reactionary blocks, and you guys are going to see a little bit more in-depth usage of how I personally use order blocks.
Ever wondered why some people seem to effortlessly grow their wealth through Forex trading while others struggle to break even? It all boils down to strategy, the right kind of strategy. Let's dive deeper into the world of Forex trading strategies, shall we? First off, the Forex market, also known as the foreign exchange market, is a worldwide decentralized financial market for trading currencies. It's the largest and most liquid financial market in the world, with an average daily turnover in the trillions. But what are these strategies that successful Forex traders employ? One of the most popular is trend trading. This strategy involves identifying the market's direction, either up or down, and placing trades in that same direction. Sounds simple, right? But effective trend trading requires keen observation, patience, and discipline. Another strategy is the breakout strategy. Here, traders set a predetermined point that once breached triggers either a buy or sell order. This strategy banks on the fact that once a level is breached, the momentum is likely to continue in the same direction. Swing trading is another strategy where traders aim to capture short to medium-term gains in a stock or financial instrument over a period of a few days to several weeks. But remember, no single strategy guarantees success. It's all about finding what works best for you, continuously learning and adapting. Now, here's a thought. What if you could put these strategies to the test and stand a chance to win fantastic prizes? That's right. It's time to flex your trading muscles in the Billionaire Makers Hub Forex Trading Challenge. It's an opportunity to learn, grow, and maybe even discover a strategy that could change your financial trajectory. But it's not just about the prizes. It's about equipping yourself with the tools and knowledge to navigate the Forex market. It's a chance to be part of a community of like-minded individuals all striving towards the same goal, financial freedom. So why wait? The Billionaire Makers Hub Forex Trading Challenge is your ticket to not just learning about Forex trading strategies, but mastering them. Remember, the Forex market waits for no one. The question is, are you ready to take the leap?